2018, the year of the enterprise. And we are not talking Star Trek here. This is the year corporate America got its biggest break in decades. Corporate income tax, which has never been below 35% since the 1940s, has been slashed by 40%. At 21%, it's the best gift business executives and investors have received in decades. And as the first quarter results start to arrive, it's starting to look a lot like Christmas this early in the year. Q1 was great for enterprises, but it has been insanely beautiful for banks. If Chinese zodiac were not restricted to animals, it would have been a no-brainer to call 2018 the year of the bank. The perfect storm of lower tax and interest rates hikes had everyone in banking feel the capitalism euphoria like rarely experienced before. The Fed raised interest rates 4 times between December 2016 and December 2017 by a whopping 1%. Free money pouring in, gift-wrapped courtesy of the government. The top banks had a 50% average increase in profits in Q1 2018 compared to Q1 2017. Take Capital One, for example. Revenues went up from $6.5 billion to $6.9 billion. That's a very healthy $400 million boost, the bulk of which came from the Fed's interest rate hike. As a result, pre-tax income went up from 50% from $1.1 billion to $1.66 billion. That by itself would have been an exceptional result. But when the tax break kicked in, after-tax income went up from $800 million to $1,135 million. That's a massive 68% increase in income without lifting a finger. The same story repeats for most banks. There is no doubt that money is arriving by the truckloads, and management is, to say the least, very happy. 2018 is shaping up to be an even better year. The Fed has hiked interest rate up already once this year and is about to repeat that one more time, at the very least. The same good story resonated in other enterprises, but without the interest rate revenue uplift. Basically, every corporate will see a nice impact on its earnings due to the tax break, but the interest rate hike, the icing on the cake, is only for banks. The big question is, where will that extra money go? What will the banks do with the free gifts handed down by the mighty government machine? There are 3 outlets. 1. To investors, in the form of dividends and stock price increase. 2. To the company, to invest in its future. 3. To employees, in the form of higher salaries, higher bonuses. The first 2 will benefit the rich disproportionately. It's not likely that the minimum wage McDonald's employee has a stash invested in blue chip stocks. The word investment belongs to the rich. The third one, salaries hikes and bigger bonuses, will be distributed to all employees, but will be biased to the high-paid senior managers. Again, the rich will eat this one up almost wholly. That's when trickle-down economics will kick in. Fatter bank accounts for the wealthy will translate into spending sprees and investments in new initiatives, which should, theoretically, keep the economy moving forward. Of course, the 2 sides of the political spectrum will have very polarized views on whether the wealth will eventually trickle down or just stay packed at the top. Reality is somewhere in between. There is truth to the unfair imbalance, but there is also truth to the excessive spending nature of the rich in capitalist political systems like the US. That spending increasingly helps move money in the economy and creates opportunities that will benefit everyone. All in all, more good news are on the way. But where is all of this money coming from? Tax breaks will mean big losses for government income. How would the government function with such big budget reductions? The answer is very simple. It won't. The government will borrow money to fill that gap, and the deficit will increase by $1 trillion by the end of 2018. What will that mean for all of us? Someone will have to shoulder that big bill sometimes in the future, and we are all going to feel that pinch when it comes. We just can't keep borrowing money indefinitely. At one point, lenders will start to ask for their money back, and we will have to make some very difficult decisions. For now, we will all enjoy the day. More money in everyone's pocket is not a bad thing. We'll just have to brace for the future. It will be a tough ride, and when that time arrives, you won't even know who to blame for the mess. The new leaders will blame the past ones will have moved on, and we will all be stuck with that bill.